We are starting. Good evening, grade 12s. Welcome. We are starting. Good evening, grade 12 learners. Welcome to lesson 2 of our exam last push plan. So on tonight's lesson, we'll be focusing on the statement of financial position. Last time that we had a lesson, we're focusing on the statement of comprehensive income. However, tonight we'll be focusing on the statement of financial position. Now, before we begin, I would like us to just go on through some short notes so that we can be able to answer the upcoming questions. Okay, first of all, let us try to know what is statement of financial position. Statement of financial position. Okay, now, someone is asking about the link. I've just sent the link now. Okay, hold on guys, hold on, let me do this. Okay, sorry for the delay. Just for quick background checking, can you all hear me? Am I audible? Hello? Just indicate there if I'm audible. Okay, sorry for the delay. Just for quick background checking, can you all hear me? Am I audible? Okay, thank you there. Let me just do one last thing. Okay, we are starting in 3 minutes, guys. Sorry for the delay. Okay, sorry to keep you waiting. As I was saying, after teaching, yeah, you'll be able to download it. Okay, so the first question, before we can begin, let us start by understanding on what is the statement of financial position. The statement of financial position, it is traditionally known as the balance sheet. Okay, why are we saying it's traditionally known as a balance sheet? Because under the balance sheet we see that assets, equity and liabilities are appearing as well. In other words, the statement of financial position, it shows the position, not just any position, but a financial position of a company's assets, equity, I am referring to shareholders' equity, that consists of the ordinary share capital and the retained income, and also the liabilities. Okay, so we know that in terms of assets, we have two types of assets. We have the non-current assets and also the current assets. And liabilities, we also have the non-current liabilities and also the current liabilities. Okay, then these are the short notes that I want us to do. Then in terms of preparing or doing the correction of net profit, net profit after tax, we have to note the following: prepaid expense increase our profit, accrued income increase our profit as well, but income received in advance decreases our profit, and also accrued expense decrease our profit. You remember the last time I explained these deferrals and accruals, that since we are preparing the statement of comprehensive income, if we are paying an expense in advance, so we have to subtract it. By subtracting it, we are preventing it from understating our profit. So right now we are adding it back. Since it was subtracted, it understated our profit. So currently we want it to correct whatever was subtracted there. So we're going to add back any prepaid expense, and we are also going to add back any accrued income. But then when it comes to income received in advance, we're going to subtract it, and also the accrued expense, we are also going to subtract it as well. So the income received in advance and accrued expense, they decrease the profit, while the prepaid expense and the accrued income increases the profit. Then other ones, you'll treat them like you normally do when you prepare the statement of comprehensive income. Okay, so let's start by going through the theory question. Okay, they are saying indicate whether the statements are true or false. The following statements are true or false. Then now 1.1.1, they are saying shareholders are responsible for the running of the company. So obviously we know that this is false because shareholders are not present every day in the company. In other words, only the directors, they are the ones who are responsible for day-to-day operations of the company. So the answer to this one, it's a false, a big false. Okay, then 1.1.2, they are saying the statement of financial position shows the financial position of a company at a specific date. This is true. This is true. Okay. Then 1.1.3, they are saying that the statement of comprehensive income shows the profit or loss for the financial year. We know that this is true because at the end we have to calculate the net profit or loss that was made. So we can only determine that when we prepare the statement of comprehensive income. So the answer is true here. Okay. And then now they are saying the information relates to the financial year ended on 30 June 2023. Then the name of the company is Lex Ltd. Okay. So the first requirement is that we are being required to calculate the closing stock. But then before that, I just want us to go through the information before we can start answering the question. So here we are provided with the pre-adjustment trial balance on 30 June. Then we are being told that the ordinary share capital when the year started, which was the 1st of July 2022, then it was amounting to 6,800,000 rand. Then when the year ended, it's a balancing figure. Obviously we have to find it. Then again we have the retained income at the end of the year, which is 895,000. Then again we have the what? We have the mortgage loan from Govi Bank. The balance at the beginning of the year, it amounted to 3,985,000. Then the balance at the end, it's a balancing figure, it's a question mark. Then we are also being told that the fixed asset at carrying value, it amounts to 7,711,501. Okay, the 1 rand, it's very interesting. Then we are being told that the fixed deposit will be our financial assets. It's a question mark here, meaning that it is a balancing figure. Then we are also being told that the trading stock, it's amounting to 2,024,500 rands. Okay, then we also have the debtors control, which is 942,460. This one, it's a current asset. And also have a bank. This time around it is a favorable, meaning that it will be part of the cash and cash equivalent. It is a current asset. Then it's currently standing at 53,440. We also have the creditors control. This one, it's a current liability. We also have the SARS income tax, the provisional payments that were made. So obviously we are going to use the provisional payments to calculate the income tax for the year. Then we also have the shareholders for dividends. The shareholders for dividends, it's for the end of the year. This means that this amount is for the final dividends that were declared but not yet, that were never paid, meaning that they are going to be paid in the next financial year. Then we also have the insurance. It's currently, before that we have provision for bad debts. From the previous year it was 25,300. Then we also have the insurance, which is 128,400. And let's not forget the rent income of 168,000. Okay. Then we are being told that the net profit before the tax, this is the incorrect net profit, was calculated before taking the following into account, meaning that that net profit before tax, the time the statement of comprehensive income was prepared, certain adjustments were not taken into consideration. There might have been some errors and there might have been some omissions. So after a process of investigation, then the following were discovered, so we have to correct the profit. Okay, then we can see that we have the stock sheet below. They are saying the stock sheet below was omitted when the final stock figures was calculated, meaning that the time they were calculating the stock on hand for the trading stock, the following stock were omitted using the stock sheet below. But then we are being told that the FIFO stock valuation method is used, meaning that we're going to use the first in first out method, whereby we are going to say that the available stock that is currently remaining will be based on the recent purchases, meaning that we are going to start from bottom up so that we can determine the value of the stock on hand. But then this one, they are saying it was omitted, meaning that it was not added there. So what we are going to do, we are going to edit from the existing trading stock amount. Then Roman figure number 2, we are given adjustment that the equipment bought on the 1st of January 2017. Interesting. The cost price was 360,000. Then we are being told that it was sold for cash for 43,000 rand. Then on the 29th of June 2023, almost a day before the year end, but then we are being told that no entries were made for the sale of the equipment, meaning that this adjustment was never recorded. So what we have to do, we have to record it. So since we're being told that it was sold for cash, obviously we're going to add to the bank, and the bank, it affects the cash and cash equivalent. Then again, this will also affect our carrying value for the fixed assets at the end of the year, and will also calculate the profit or the loss that was made on the sale or this disposal. Okay, then we also have the provision for bad debts. The same provision for bad debts should be adjusted to 28,500. I remember on our last lesson I said that if they say buy, that is the difference, but then this time around they said to, it means that they have already calculated it for us. What we have to do is that we have to compare the one for this year with the one from the previous year, so that we can determine if it is an increase or a decrease. Remember, when provision for bad debts decrease from one period to another, it is an income, but when it increases, it is an expense. I repeat, when it increases, it is an expense, and when it decreases, it is an income. Okay, then we also have information V here, IV. We're being told that insurance includes an amount of 40,800 paid for the period 1st January 2023 to 31 December 2023. Remember, our year is ending on 30 June 2023, but then we're being told that 40,800 which is for the period 1st January 2023 up until 31st of December 2023, meaning that here we have prepaid expense. And remember what I said earlier on, I said that prepaid expense it increases our profit. Okay, then we are also being told that the rent is received for the period 1st July 2022 up to 30 September 2023. And remember again, the year is ending on 30 June 2023, but then we are being told that they received rent up until 30 September, meaning that from 1st of July 2023 up until 30 September, this is a rent received in advance, or income received in advance. And remember what I said earlier on, income received in advance, this one decrease our profit. Okay, then we are being told that a creditor with a debit balance of 11,000 must be transferred to the debtor's ledger. Be careful here. Currently we have a creditor's account, meaning that we overpaid them. When we overpay our creditors, Some of them, they eventually become our debtors. So when they become our debtors, obviously debtors control is going to increase. Now since we want to cancel the debit balance, it means we are going to credit. Now creditors control, it is a liability. Whatever you record on the credit side of the creditors control, it will increase the creditors control. But then since here we are cancelling it, then it doesn't matter whether it increase or not. Okay, then here information VII, we are being told that information from the loan statement received from Hovi Bank, the monthly repayment including interest, meaning that on a monthly basis they are paying 45,000 for the loan. It means that if we want to find the annual loan repayment, we have to subtract that by 12 months. Then that'll give us the annual loan repayment. Then again, we have to be mindful of the interest that is included in the repayment. So we can use the loan repayment that is inclusive of the interest, so that we can find the interest as well. Then we can also find the capital portion of the loan that is repaid for the year. Okay, then we're being told that interest on loan is capitalized, meaning that the interest on the loan is added to the loan account. Then when it is paid with the interest as well. Then we are having the balance on 30 June 2023, which amounts to 3,755,000. This should be the loan balance at the end of the year according to our company records. Then we have to note that the current portion of loan will be increased by 70,000 in the next financial year, meaning that next year when we do the capital repayment of the loan, we are going to pay more as compared to what we are currently paying now, meaning that if you want to find the current portion of loan for the next financial year, we have to consider the current portion of loan. Someone is saying we can't see properly. Is it Munening Manghoke? Okay, what you have to do just click on the settings part. Then you can decide on the video quality. If you check the video quality there, you can just change the quality. Then when you change it, you can decide. On my side, the maximum, it says, let me see, it says 1080p. So you'll choose between 480p and 1080p. Again, make sure that your device it's on landscape mode, because if it's on landscape mode, it will be easier for you to see the content. I hope you can do that. Adjust the video quality by going through the settings. Okay, then as I was saying, the current portion of loan for the next financial year will increase by 70,000, meaning that we have to add the 70,000. Then again, we are being told that after taking the above omissions into account, it was determined that 65,500 was due to SARS. This is the amount that is due to SARS. This will be SARS income tax, and this will be the current liability. And we can use this SARS income tax as a current liability to find the amount of tax that was paid for the year. Okay, then we are also being told that a final dividend of 45 cents per share was declared. So remember earlier on we were told the shareholders for dividend, but then we don't have the number of shares. Obviously we can use this amount to do something. Okay, then we are being told that the following financial indicator was calculated on 30 June. We are being told that we have the net asset value per share, which is the NAV. Obviously, we know that the formula for NAV is the shareholders for dividends, not shareholders for dividends, I mean, but the shareholders' equity, that is inclusive of the ordinary share capital and the retained income. Then we are to divide the shareholders' equity by what? By the number of shares in issue at the end of the. So we are going to find how we are going to do this one. So this one, it's very simple. Then we're being told that a fixed deposit was made at the Best Bank on 25 June 2023. So this one obviously will be our balancing figure. Okay, so let's start writing. Let's start with the net, the calculation of the value of the trading stock. So remember, we've been told that trading stock, first of all, they are using the FIFO method to value the stock on hand, meaning that we are going to say the stock that is recently purchased will be the one that is remaining. So we are given the units or the quantity of the stock that is currently on hand. So we're going to say 400 units on hand. Then we're going to base it on the existing purchases. Okay, so meaning that the 400 units, it's from when? Let me zoom here, since some of you are saying you can't see very clear. So it means that the 400 units, since you can see that if we take the 350 here, it means that some of the units that are currently here, they are from the April purchases. So we are going to say 350. Then now if we want to find the remaining units, we're going to say the 400 minus 350, and that means that 50 units would remain from the November purchases. Now each units, they were purchased at different prices. So 350 units, they were purchased at 100 rand per unit. Then the 50, meaning that they would be from the November, meaning that they were purchased at 90 rand per unit. So we're going to say 90. Okay, so when we say, so it will be 50 multiplied by 90, that will be 4,500. Then we take the 350, we multiply that by 100, that gives us 35,000. Okay, so now when we add everything together, it will be 35,000 plus 4,500, and that'll give us how much? That'll give us 39,500. So I know it says the answer should be there, so it's 39,500. Okay, I hope you can see them, Munene. Okay, so now let's go through this one of calculating the net profit before tax. So here we are being told that we have to calculate the profit or the loss that or the loss on sale of equipment. So here we have to consider the information Roman figure number 2. Okay, so here we're going to say loss or profit or loss on sale. Okay, so here one thing that we have to consider is the fact that the equipment, it was purchased on the 1st of January 2017, and we're also being told that the cost it's 360,000. Then we're being told that it was sold for cash for 43,000. Then we're also being told that there were no entries that were made. Then in terms of the depreciation, we're being told that the depreciation on this equipment, it's at a fixed amount over 6 years. So meaning that it should be depreciated in the next 6 years by a fixed depreciation amount. So first of all, we have to find the annual depreciation. To find the annual depreciation, we are going to take the cost, which is 360,000. So we're going to say 360,000. Then we are going to divide that by 6, and that gives us how much? So we're going to say 360,000. We divide that by 6, then that gives us how much? That gives us 60,000. Okay, so now we have to calculate the depreciation for the financial year that ended on 2017, 30 June 2017. So what we are going to do, I'm just going to do a table here whereby it will consist of the date and also the depreciation for the particular year and also the accumulated depreciation. Okay, so in terms of the date, we know that it was purchased on the 1st of January 2017, and during that year, the year ended on 30 June 2017. Okay, then since it was purchased from 1st January, it means it was used from the 1st January up until 30 June. So when we are going to depreciate it, we're going to depreciate it from January up until June. So when we count, it will be January, February, March, April, May, June. So we are going to depreciate it for 6 months. So we're going to say 60,000. Then we're going to multiply that by 6/12. So 60,000 multiplied by 6/12, that gives us how much? 30,000, meaning that the depreciation for this year, which is 30 June 2017, will be 30,000. Now the accumulated depreciation will be 30,000. Okay, then now it means that other years that will come, we are going to depreciate it for the whole year or for the whole year. So the next year, the following year will be 1st July up until 1st July 2017 I mean, to 30 June 2018, and the annual depreciation will be 60,000. Now if we want to find the accumulated depreciation, we are going to consider the accumulated depreciation from the previous period, and we are going to add it with the depreciation for the year. So it means 30,000 plus 60,000 will give us 90,000. Okay, then next year it will be 1st June 2018, 1st July I mean, not June, sorry about that. So it will be 1st July 2018 up until 30 June 2019. So it will be 60,000, and again 90 plus 60,000, 90,000 plus 60,000, that gives us 150,000. Okay, then the following year will be 1st July 2019 up until 30 June 2020, and it will still be 60,000, the annual depreciation. So this time around it's 150,000 plus 60,000, that gives us 210,000. Okay, and then next year it will be 1st July 2020 up until 30 June 2021. So here again it will be 60,000, and that'll give us how much? 210,000 plus 60,000, that gives us 270,000. Okay, then 1st July 2021 to 30 June 2020, 30 June 2022, then it will be 60,000. Then when we take the 270,000, we add with the 60,000, that gives us 330,000. That will be the depreciation, accumulated depreciation. Now for the year ended, if you remember, this equipment, it was sold a day before the year ended, so 29 June 2023. So we're going to say 52 to 29 June 2023, the year end. So the depreciation will be 60,000. However, we have to test if the depreciation will be 60,000 or not. So what we are going to do before we can validate the 60,000, what we are going to do, we have to compare. Remember, on our last lesson, I said that it is very important that you test your depreciation and see if maybe it will exceed the carrying value at the beginning or be the same as the carrying value at the beginning. So now when the year started, I just want you to see something. When the year started, the accumulated depreciation was 330 and the cost. So what we're going to do, we're going to test the CV, the carrying value at the beginning. So we're going to take the cost of 360,000 here. So we're going to say 360,000. Then we're going to subtract the 330,000. Then that'll give us how much? So if we take 360,000, then we're going to subtract 330,000. Then that means that the depreciation, the carrying value is 30,000. The depreciation of 60,000, it exceeds. So let me say depreciation of 60,000 is more than carrying value of 30,000. And remember what I said last time, that if it is like this, then depreciation will be the carrying value minus the 1 rand. So in our case, it will be 30,000, then we minus the 1 rand. So the 1 rand, remember, it is the residual value, the value of an asset after it has been fully depreciated. So here we can see that it has outlived its useful life already. So depreciation cannot be 60,000, but it is going to be how much? So it will be 30,000 minus 1 rand. It will be 29,999. Okay, then that means that the depreciation or the accumulated depreciation at the date of disposal will be 359,999. So if we are to prepare the asset disposal account, we can use many ways. We can determine the profit that was made. First of all, the cost of the equipment. The cost of equipment, according to this info, it's 360,000. So here we record the 360,000. Then here we record the accumulated depreciation, which is how much? 359,999. Then when we record what? When we record the bank amount that was received. So bank, if you remember, we're being told that it was sold for cash, 43,000 here. So here we write 43,000. Okay, then we are to find the bigger side. Obviously the bigger side is the credit side. So when we take 300,000, 359,000 999. Then we subtract 43,000. That gives us how much? That gives us, we don't subtract, we add, that gives us a total of 402,999. So we take this, we bring it to the debit side. It will be 402,999. So if we take 402,000 and subtract 360,000, we're going to get a profit on sale. Profit on sale of equipment of how much? Of 42,999. So if maybe you think that the asset disposal will take too much of your time, you can just use the formula whereby you'll say profit, it will be exchange amount. So let me just say exchange amount, because it can be cash, it can be traded in. Exchange amount, then your minus carrying value, then loss will be the same. So if the difference is positive, it's a profit. If it's a loss, then it's a what? Loss. It will give you negative amount. So let's come here. So when we calculate here, we are just going to take how much? We're going to take the exchange amount, which is 43,000. We're going to take the 43,000, then we're going to subtract the 1 rand. Okay, then that'll give us how much? This will give us the 42,999. So here it will be 42,999. However, even if you say that since we are disposing it, then there is no need for me to apply the 1 rand rule. So whether you apply the 1 rand rule or not, it will still be okay. Then in terms of the provision for bad debts, now remember we're being told that remember profit, it increases our profit. So profit on sale of equipment, then it increases our profit. But if it was a loss, then it will decrease it. Then here we're being told that provision for bad debts should be adjusted to 28,500. Remember what I said in terms of provision for bad debts. Let me add another page. Okay, let me add another page and mark it provision for bad debts. Provision for bad debts. Okay, so here remember what I said, that if it decrease from year 1 to year 2, it is an income. But if it increase from year 1 to year 2, it is an expense. I'm just reminding you here. Okay, now if we notice something, provision for bad debts, which was calculated for 2022, for year 1 it's 25,300. Then for year 2 is the 28,500. 28,500. So if you notice here, what happened to it? It has increased, and when it increased, therefore it is an expense. So when we come here, we're going to say provision for bad debts. So it means this one will be an expense. So we're going to say 28,500. Then we're going to subtract 25,300. So it will be 28,500, we subtract 25,300. That gives us how much? 3,200. Remember, it has increased, so it is an expense, so it will be 3,200 as an expense. Okay, then next up, it will be the insurance. So for insurance, first of all, you have to analyze this one thoroughly. They are saying insurance includes an amount, meaning that inside this insurance amount of 128,400, they've included the 40,800, and that 40,800, some of the insurance premiums there, or the monthly insurance expense inside that amount, are not for the current financial year, meaning that at the time they were preparing the statement of comprehensive income, they included the prepaid expense for the next financial year, the insurance for the next financial year, meaning that our profits were understated. So what are we going to do in this case? We are simply going to add back the prepaid that was subtracted. So, but then before that, we have to note that our year, it's ending on 30 June 2023. But then we are being told that it has been paid up until December 2023, meaning that from 1st July up until December, it will be prepaid. So we don't want that one. So what we are going to do, we are just going to take the 40,800 and we're going to multiply it by the insurance expense for 6 months over 12. That gives us how much? So 40,800 multiplied by 6 over 12. That means 20,400 is the prepaid expense that they subtracted. So what we are going to do to correct our profit, we are going to add it back. Prepaid expense, we add it back. So here we're just going to say 40,800 multiplied by 6 over 12. Then we're going to add back 20,400. Okay, simple one. Then now for the rent income. For the rent income, here, if you notice, we are being told that the rent has been received for the period 1st July 2022, the beginning of the year, up until 30 September 2023. And we know that our year, it's starting on the 1st of July 2022, but then it's ending on the 30 June 2023. But we're being told that they received the insurance, the rent income up until 30 September 2023, meaning that from the 1st of July up until September, it is income received in advance. Income received in advance. So remember how we treat income received in advance. We have to subtract it. It overstated our profits. So what we are going to do, we have to take note of the increase that was effective from the 1st of April. So to do this, it's very simple. We are just going to use this timeline here. Let me put a blue color. So we are being told that it increased from April, meaning that from April, May, June, July, August and September, the monthly rent, it has increased by 800. It was more by 800. So what we are going to do now, first thing first, is to find the monthly rent before the increase. And to find the monthly rent before the increase, since these amounts here were added, to find the monthly rent before the increase, we first have to subtract them. We have to remove them there. So it will be how much? Remember, the annual rent according to the rent account, it's 168,000. So we're going to say 168,000. Then we're going to subtract those 800 added together. So it will be 800. 1, 2, 3, 4, 5, 6. 800 times 6. So it's how much? It will be 168,000 minus 800 multiplied by 6. It's 4,800. So we're going to say 168,000 minus 4,800, then it's 163,200. Remember that the rent was received for 13, not 13 but 15 months, because our year it's having 12 months. Then the income that we received in advance, it's for July, August and September. That makes it 15 months. So to find the monthly rent, we're going to take the 163,200, we're going to divide it by 15 months. That'll give us how much? Divide by 15. That means that the monthly rent income before the increase was 10,808. So we want to find the monthly rent after increase. It will be how much? It will be 10,880 plus that 800 plus 800. The monthly rent income after the increase is 11,608. Now remember, 3 months were received in advance. So here we're going to say 11,680. Then we multiply that by 3. Multiply by 3, it's 35,040. So they said we should use the plus or the minus. So here I'm deviating from the question. So let's just use what the question says. So here it's a negative, here it's a plus, here it's a negative. Then interest on loan, it will be a negative. Even the income tax will be a negative as well. Okay, then let us calculate the interest on loan. Okay, so in terms of the interest on loan, first of all, there are many ways in which we can find the interest on loan. We can either use the loan account, or we can use the straight line method, straight line calculation. So let me just show you two approaches. Okay, so I'm going to say interest on loan. So to find it, we can use the loan account. Remember, loan, it's a liability. It increases on the credit side and it decreases on the debit side. So here we're going to say the balance brought down we're going to refer to the list of balances from the pre-adjustment trial balance. So the loan at the beginning of the year, it is how much? 3,985,000. Then interest on loan will be our balancing figure. Interest on loan will be our balancing figure. Then here, the bank, it represents the payment. Now for the payment side, remember, in terms of the loan, they said that the monthly repayment. So here we only want the annual repayments. So if something says monthly, we have to multiply that by 12 to find the annual. So we're going to say 45,000 multiplied by 12. That gives us how much? So it's 45,000 multiplied by 12. Annual repayment inclusive of the interest amounts to 540,000. Sorry about that. Then now here we are to have the balance carried down, which will be the balance at the end. Okay, now based on this, we are given information from the loan statement, which is 3,755,000. So this will be our balance carried down, 3,755,000. Okay, then we can use this to find everything that we want. So it will be 3,755,000. Then we add it with 540,000 to find the bigger side first. So the bigger side, it's the debit side, which is 4,295,000. Then we bring it to the credit side, should be on the same level here. So it will be 4,295,000. Then we subtract the balance brought down, 3,985,000. Okay. What is this? Hmm. 4,295,000. We subtract 3,985,000. That gives us 310,000. So 310,000 is the interest on loan. So in terms of our calculations here, first of all, we are going to consider what? We are going to consider the loan balance according to the loan statement. So it will be 3,755,000. Then we're going to add the repayments for the year that are inclusive of the interest. Then we're going to subtract the loan balance according to the trial balance at the beginning of the year, which is 3,985,000. Okay, then that'll give us 310,000. The 310,000 is the interest on loan. I've calculated it earlier here. Okay, then for interest, we've calculated it. Then for income tax, then even on income tax, we can use the SARS income tax account. Income tax, so we're going to say SARS income tax. So SARS income tax, it's a liability. It increases on the credit side and it decreases on the debit side. So here we are not given the balance brought down, but then we are being told that there are provisional payments, and we also have the balance that is due to SARS, meaning that it will have closed on the debit side. It's 65,500. Then the provisional payment, it was how much? Provisional payment, it's 914,600. So here will be our income tax, which will be our balancing figure. So we are to add the bigger side first. So the bigger side will be the debit side. So it will be how much? It will be 914,600. Then we add 65,500. That gives us 980,100. Then we bring this amount here, 980,100. This will be our interest, not interest but income tax, 980,100. I hope it makes sense, this one. Then in terms of straight line, it's simple, it's straightforward. So we just take the provisional payments of 914,600, then we add with the credit balance. So it's how much? 65,500. That gives us 980,100. So let's add everything up to find the correct net profit after tax. So correct net profit after tax will be 3,551,841. We add with the 42,999. Then we subtract the 3,200. We add the 20,400. We subtract 35,040. We subtract 310,000. Then we subtract 980,100. That gives us how much? That gives us 2,286,900. That will be our correct net profit after tax. Then now we can proceed to the statement of financial position at last. Okay, so here we won't take that much time. Okay, so here first of all we have to note that there was an equipment that was sold. Okay, then the equipment, since it has outlived its useful life, then the carrying value of that equipment was now 1 rand. So remember, we currently have what? We have the carrying value of the existing fixed asset, and that includes that equipment, meaning that it was never recorded. So we are being told that no entries were made. So to calculate this one, the answer will be simple. So we're going to take the carrying value of 7,711,501. Then we subtract the 1 rand. The 1 rand is the carrying value of that asset that we disposed. Okay, so it's 7,711,501 subtract 1. That gives us 7,711,500. Then in terms of the fixed assets, the financial assets, it's our balancing figure. We'll come back for this one. This is the fixed deposit. Do not be afraid, fixed deposit. Then we're going to come to the inventories. Remember, earlier on we calculated the value of inventory on hand using the FIFO method. And remember, we're told that this was omitted, meaning that it was not recorded, it was never included. Then we have to include it. So it means we're going to start by taking the trading stock of how much? Of 2,024,500. Then we're going to add how much? We're going to add the amount of 39,500, this one here from earlier on. So we're going to add 39,500. Okay, that gives us how much? So 2,024,500. Then we add 39,500. That gives us 2,064,000. Okay, then now we have to adjust the trade and other receivables. You remember there was a provision for bad debts, and provision for bad debts always decrease what? Always decrease our trade and other receivables. This one here, each year that we adjust that provision for bad debts, it decreased trade, and it decreased the trade debtors in fact. So it will be subtracting 28,500. Then we're going to refer back to our other adjustments. If you remember, there was a prepaid expense for the insurance, the 20,400. So we're going to say plus 20,400. Then if you remember, there was a creditor with a debit balance of 11,000, so must be transferred to the debtors ledger. So it means that the creditor will now form part of our debtors. So when that happens, it means that our trade in other receivables is going to increase. So we're going to add 11,000 here. Then that gives us how much? So it will be how much? So we're going to say 942,460. We subtract 28,500. Then we add 20,400. Then we add also the 11,000. Then that gives us how much? That gives us 945,360. 945,360. Okay, so may you please repeat what you said for fixed assets? Okay, so for fixed assets, we subtract the carrying value of the asset of the equipment that we disposed. If you remember there earlier on, the depreciation of the asset at that time, the equipment, it was more than the carrying value, so we had no choice but then to now value it at 1 rand using the carrying value of 1 rand, meaning that we are applying the what? We are applying the 1 rand rule. Okay, and now it means that the 1 rand, it will now be the carrying value of our fixed asset, our equipment. So when we dispose a fixed asset, we have to remove even its carrying value. Hence we are saying the existing one, which is 7,711,501, then we subtract the 1 rand. The 1 rand is the carrying value of that sold equipment. Remember the rule, you say carrying value at the beginning, then you have to add in additional, then you subtract the depreciation for the year, then you also subtract the carrying value of the disposed asset. So we are applying the 5-finger method that you would use when you prepare, when you calculate the amounts, whether it's a fixed asset question or in the cash flow. So hence we are using the 1 rand there. I hope you are clarified. If you have any question, just indicate that you are sorted there. It's Ditaba TV. Just indicate if you understood there. Okay, then while we are waiting your response, then let's resume. Now under cash and cash equivalent, We want the bank that is favorable. We want the petty cash. We also want the cash flow. So let's see what is given to us. Now here we are given what? We are given the bank, and they are saying it's a favorable, meaning that it is a debit bank balance. So here we're going to say how much it is, 53,440. Okay, then let's not forget the 43,000 that was received the time they were selling this equipment, and then we're told that this was not recorded. So here this would increase our bank, meaning that our cash and cash equivalent are to increase with 43,000. Okay, then it will be how much? So it will be 53,440. Thank you, the editor, for hearing me and understanding. Then we add with 43,000. That gives us how much? That gives us 96,440. Okay, so now we want to find the current assets. Current assets meaning that we are going to add everything that is here. So we are not going to beat around any bush. Anything that is inside the box will form part of our current assets. We are going to add it together. So for those of you who are still finding it difficult, let me show you how we are doing it. So we're going to consider the 2,064,000 rand. Then we're going to add the 945,360. Then we are also going to add the cash and cash equivalent of 96,440. So it will be 2,064,000. We add with 945,360. We also add with how much? 900 and it's 96, 96,440. Then that gives us a total of 3,105,800. Then we are done with the current assets. So we cannot yet complete the total assets since we don't have the financial assets. Then now to the ordinary share capital. So before anything else, let's try to fill those ones from the bottom, but then we can also fill this one as well. Remember, we are given the NAV. We're given the NAV here. We are also given the final dividends per share and also the NAV. So let's just find the number of shares in issue. This one will help us to calculate shareholders' equity. Shareholders' equity. So we want the number of shares. We want the number of shares first. And to find the number of shares, we're going to use the shareholders for dividends, which is how much? 616,500. Then we're going to divide it by how much? By 45 cents per share. Remember the time they calculated the final dividends. Let me just do it this way. Remember final dividends is equals to shares in issue multiplied by cents per share. So what we have now, we have the final dividend, which is now our shareholders for dividends, and we also have the cents, but we don't have the shares. So we're going to use the shareholders for dividends, and we're going to divide it by the number of cents. That'll give us how much? So it will be how much? So it will be 616,500. We divided by 0.45, which is 45 cents. then that tells us that the number of shares in issue it is 1,370,000. So to find the shareholders equity, remember the formula for NAV as well. The formula for NAV says shareholders equity, then we divide by shares in issue, So we have the NAV. How much is the NAV? The NAV it's 420 cents, meaning that it's 420. The NAV it's 420. Then shareholders equity, we don't have it, but we have the number of shares, which is 1,370,000. So when you do the entire math calculation, I believe when you change a division sign, it becomes a multiplication. So it will be how much? It will be 420. Then you multiply by 1,370,000. So this will be how we are going to calculate our shareholders equity. So our shareholders equity, it will be how much? It will be 1,370,000. Then we multiply that by 420. The 420, it was, remember, it's 420 cents, and if you take 420 cents, you divide it by 100, it gives you 420. So we're going to say multiply by 420. That gives me how much? 5,754,000. To find the ordinary share capital, we take the 5,754,000, we subtract the retained income of 895,000. That'll give us the ordinary share capital minus 895,000. That gives us how much? 4,859,000. 4,859,000. Okay, then next up it will be the mortgage on loan. Remember, with loan we have to consider the balance at the end based on the loan statement, then we subtract the current portion of loan. So the balance at the end, according to the loan statement, this is the correct balance. So it's 3 million. So it means to find the loan at the end, so we're going to say 3,755,000. that will be appearing in our statement of financial position. Then we're going to subtract the current portion of loan. So the formula says balance at the end, subtract what? The current portion of loan. But remember, earlier on when we were calculating, let's go back to the loan amount. Earlier on when we were calculating, we only calculating the interest. We still have to calculate the repayment, which will be this year's current portion of loan. So it will be how much? It will be repayment excluding interest. Then we subtract the interest of 310,000. That gives us how much? So we're going to say 540,000 minus 310,000. That gives us 230,000, meaning that this year the current portion of loan was 230,000. But now we have to note that they are saying that next year when they pay, it will be 70,000 more as compared to this current year's current portion of loan, meaning that next year we are going to pay 210,000 plus the 70,000. meaning that our current portion of loan will be how much? I believe it's 300,000 I mean, so it will be 230,000 plus the 70,000, meaning that next year we should pay 300,000 for the loan. Okay, then in terms of here, it will be 3,755,000. Then we subtract 210 plus 70,000 is 300,000. Then that gives us how much? 3,455,000. Then this will be 3,455,000. Okay. Then next up, it will be what? Next up, we have to show what? The SARS income tax. So this one is simple. So we're going to say SARS income tax. But then we are not yet done with the trading other payables. So SARS income tax. Then our SARS income tax is just here on the information, 65,500. So we're going to say 65,500. Then we also include shareholders for dividends. Shareholders for dividends. Now shareholders for dividends, according to the trial balance, it's 616,500. Okay. Then next up, you remember last time we were having the rent income received in advance, so we're going to bring it here as well. So we're going to add 35,040. So we're going to say plus 35,040. Then we are also going to add what? Remember, we're told that a creditor with a debit balance of 11,000. So when we want to cancel a debit balance, we have to take it to the credit side, and creditors control increase on the credit side. So we're going to say plus 11,000. Okay, then that'll give us the total trading other payables. So it'll be 1,962,260. We add 35,040. We add 11,000. That gives us 2,008,300. Okay, then let's add everything up. So here we add everything that is inside our box. So it will be 2,008,300 plus the 300,000 plus the 65,500 plus the 616,500. Then that gives us how much? 2,990,300. Then we just add everything together. So we're going to start with the liabilities since we have everything. So it will be shareholders equity, which is 5,754,000. Then we add with the non-current liabilities of 3,455,000. Then we add with the current liabilities of 2,990,300. Then that gives us total equity and liabilities of 12,199,300, and this will be our assets. Remember, under the balance sheet or the statement of financial position, your assets should be the same as your liabilities and equities combined. So it will be 12,199,300. Then to find our current assets will be 12,199,300 then we subtract the current assets of 3,105,800. Okay, then we subtract 3,105,800. That gives us 9,093,500. Then that makes our financial assets a question mark, so that we can find it. It's a balancing figure. Then we subtract the fixed assets of how much? Of 7,711,500. Then it says it's 1,382,000. That's how we do it, guys. That's our statement of financial position. If you have any question, don't be shy to ask, guys. Don't be shy to ask. Don't be shy to ask. So if you have any question, guys, just indicate there. Don't be afraid. Yes, Simple. Do you have any question? Oh, sorry there. I'm glad you fixed it. Not the 210 though, ne? It's supposed to be 230. You are correct there, Simpue. You are correct there. You are correct there, Simpue. Thank you there, Simpue. I've fixed it. It should be 230,000, not the 210 there. Sorry there. So if there is no any other question, then we can end the lesson here. Then our next lesson, hopefully tomorrow we can have another lesson. Then according to our plan, I'll check either is the ratios or the cash flow statement. So I'll have to check. So thank you there, Simpwe, as well, and also others for honoring the call. Thank you very much, guys, and enjoy the rest of your evening. Okay, thank you there, guys. Good night, ne? And enjoy the rest of your evenings.